Hello and welcome to Your Property Empire. I'm Chris Gray. On tonight's show, I thought we'd take a wider look outside property and look at financial planning and wealth creation to see what other advisors we might need in our team and other things that we should consider to ultimately try and get a higher reward and to take less risk with our property investing. Now, joining me tonight is Mike Sikar from Delta Financial Planning, and he's got a very different title. I think you call yourself a financial planner, personal lifestyle and wealth advisor. So welcome to the show.
Thanks
you, Chris. For joining us the first time. How do you describe that title? What do you exactly do?
Well, I guess we're more than simply financial planners. I guess we work with our clients to create an inspiring strategy so they can get their entire financial house in order and do the things that are more important in life than money.
Because, I mean, I literally see thousands of people kind of over the years doing TV and seminars and the rest of it. The average person hasn't really got a clue, have they?
Sure.
There's so much stuff that they need to think about, and they never spend any time at work or at home actually talking about it.
Well, there is. I guess the way I look at it is, you don't know what you don't know, and I guess it's always good to have a coach to some degree in your life. So I guess, we help our clients align their financial choices with their lifestyle goals, because I guess at the end of the day, money is just a means to an end. And, it's just more, you need money to be able to do the things that you want to do, but I guess that might be material things, but at the same time, it might also be spending more time with your family and friends. So I guess a lot of the conversations we have, or I have with my clients, it revolves around their passions, their goals, their life vision. So it's not so much just strategy talk.
Because I guess, what does financial planner mean? Because a lot of people say coming out of school when you don't know anything, you might say financial planner, oh, that's just, I need to buy some insurances, but that's a tiny little portion, isn't it?
Sure. Ideally, I guess a financial planner, ideally, it helps you get from where you are at the moment to where you want to go. And to some degree, they kind of act as a coach, accountability buddy or a sounding board. I guess the main thing is that, they formulate strategies to help you, maintain your lifestyle and grow your wealth and protect your family in terms of what you were saying, but mainly to help you, I guess, simplify complex matters.
And would all financial planners be the same, or are they kind of different things, just like you have different accountants for different types of things, from personal to corporate to takeovers? Is financial planning the same kind of thing?
Yeah, definitely not. I guess, in my kind of experience, I've seen there's 4 different types of financial planners. That you've got basically, the product specialist. That's somebody that kind of specialises in giving product advice. So it could be like retirement income, gearing, insurance, or SMSF advice. So example would be, an insurance specialist. They specialise in providing personal protection advice, and they usually receive a commission by recommending a particular product. The other advisors you'd have would be like an investment advisor, will be an investment specialist. So they might give you advice on asset allocation, managed funds. Some of them do direct shares, and their kind of value proposition is, I'll help you make smart investment choices with your money, so to speak. A lot of financial planners fall into kind of what's called a wealth manager. It's kind of, they provide holistic advice, and the advice is based on, the financial planning, helping people make smart choices with their money. So it's designed for clients that have some type of complexity. But I guess, did you have something to say?
Yes, so I guess they're almost like a one-stop shop, but then a sub that financial planner, they may then have the specialist that they bring in to say, right, we'll bring this guy in for insurances, we'll bring this guy in, say, for managing the share portfolio.
I guess, our relationship with clients, it's not so much based on the strategy, it's based on the outcomes of delivering that advice. And the clients have some type of complexity where they need specialists. So I'm kind of like a central point of contact, coordinating other specialists that we would engage. So for instance, you'd be the property specialist, accountants doing different things, finance specialist.
So I guess for the property investors out there, so we would bring in Residex to say, right, what are their highest capital growth suburbs? We'd bring in the accountant and say, right, let's get some tax advice and the right kind of structure, and then get a mortgage broker in. So it's a similar kind of thing within the general whole financial thing. Yeah. I guess there's a big thing now talking about independence. Is there such a thing as an independent financial advisor? Because a lot of the time they seem to be tied to products still.
It's a good question. I guess to be truly independent, I mean, you can't be tied to a bank, an investment or an insurance company. You can't take any commissions on any investment or insurance products, and you can't be charging your fees. You can't be charging fees based on kind of assets under management. So in essence, there's probably under 10% of the advisors nationally that would fall into that category. And bearing in mind there's 20,000 advisors nationally, but in saying that, I guess you know, the dilemma is like average Joe and, you know, property investors are not prepared to pay $10,000 for a financial plan. And also, you know, a lot of the time they pay for like ongoing advice using their super money. So I guess my answer to that is really, you know, find someone that you trust, and ideally you're going to have to meet these team of people we spoke about at some stage in your life. But I found that getting some advice, you know, that cost of advice should be quite insignificant to the value a good advisor should add for you.
But I mean, this is the tough thing, because in the old days of going and getting free financial advice, effectively it's costing you because there's money in the products.
Sure.
Whereas if you did go and spend 5 or 10 grand on getting a financial plan, which again, a lot of people may not have the cash to do, potentially that plan could actually be cheaper because you're actually saving money because it's not all these hidden costs kind of stuck in there.
Very true. I guess that's the reality. Is it's kind of, that's always been a dilemma in the industry, and we're kind of moving towards more, you know, clean-cut advice.
Because there's been some reforms on it. Is it FOFA, the financial advice?
Yeah, it's the future of financial advice. It's just really, it came about to talk about these issues that we're talking about, but more just to bring trust and confidence to the industry. You know, the ASIC, there's kind of two main things that they kind of look at. You know, the first thing there, it's you know, the new fee disclosure, and they call it opt-in. It's just really, you know, clients should be able to understand what they're paying each year and what exactly they're getting. And then also the opt-in, like for any clients that they take on, that every 2 years they need to agree to sign to continue to pay my ongoing advice fees.
So if you forget that you've got a direct debit going through your bank account, then it's to stop those kind of things.
Well, it's even more so to stop, you know, advisors that have sold, you know, products over time and are taking a trailing commission but not actually giving any advice.
Right.
So there's nothing wrong with charging fees, pending there's advice that goes with the fees.
Yeah. And so is that the way the whole industry is going, that there's just a lot more disclosure, there's a lot more advice, almost like going to an accounting firm rather than a salesman in a way?
I think there's been a lot of kind of movement in the industry. So I think the industry, like at the moment, there's been a lot of like mergers and kind of acquisitions. So professional services, you know, financial planners, accountants, mortgage brokers are consolidating to, in a way, provide that one-shop stop, because people, you know, don't have the time to do it all themselves, hence that coordination.
But I mean, it's a hard thing, I guess, historically within financial planning, because most financial planners would never advise on property or never suggest you buy property.
True.
And I assume, without being too shallow, that it's because they don't get paid to do it. And so they're always going to typically tip them into somewhere else.
Historically, yeah, financial planners, the fee has been correlated to how much money you have invested in the share market. So even myself, as a, you know, ex-stockbroker of 8 years, I definitely am pro-shares, but it's very, you know, it's ignorant to not include property as part of an overall portfolio type of thing. And
again, that's with the fee changes, then hopefully that's going to come out more, that a lot of people, like I kind of go to Hong Kong and Singapore a lot, and a lot of the advisors there are pro-property because people want to buy back in Australia, and they've just found they've had to adapt to the system and provide it as part of their offering.
Sure, it just really, yeah, 100% correct. It just really depends on your offering.
Okay, so I guess the next obvious question for a lot of people is they say, look, I'm already managing my money. Do I really need a financial planner?
Sure.
And how much difference is it really going to make?
Valid question. I guess, you know, at the end of the day, I mean, from my personal experience, having a coach to some degree in your life, there's a lot of value. You know, whether it's on a personal level, a business level, or a finance level, and you know, you don't know what you don't know. So I've kind of, there's 3 different types of people out there, and once you understand what you are, then you can kind of have a better understanding of whether or not you need advice. But I kind of call them, the first one there is kind of do-it-yourselfers. You know, people that, you know, want to open up the accounts themselves. You know, they want to project manage everyone. They want to trade their own, you know, have an online trading account, so to speak. You've got the collaborators. Collaborators are, you know, they're like do-it-yourselfers, but they still, you know, they want to lean on someone for the occasional advice, or they want to get someone to do the research, or perhaps to confirm that they're on the right path. And then you've got, I guess, probably the people that, you know, we both work with. They're called financial delegators. It's just people, you know, that don't want to do the research themselves. You know, time-poor professionals, people they could potentially, you know, do it. It's just that they, you know, they want to get on with their life and, you know, do the things that are more important in life, the money, and happy to outsource, you know, the financial stuff, and, you know, and hold on to the things that can't be outsourced, like, you know, family time, going on holidays and enjoying a retirement type of thing.
And there's probably a fourth group as well, and that's probably the ones that are always going to say they're going to do it tomorrow and it never happens.
Sure.
Because there's got to be so many people that suddenly are relying on their super, waiting until 65, thinking that's going to have all the answers, but they never get around to it because they're working too hard, they're going on holidays, they're spending the money, they're spending all the time with the families. There must be a massive percentage that just don't do anything.
Yeah, I guess it's just in terms of that, it's one of the reasons why people don't get ahead in life, and it's it's the reason for procrastination.
Yeah, and look, certainly I'm a massive fan of getting coached and getting pushed to go and do stuff, because otherwise we're just too busy with our lives. We mentioned the cost there, like maybe 5 or 10 grand or something. What are maybe the rough costs of maybe going to see a financial planner, and maybe how do they change, like depending on the kind of services you order?
Yeah, I guess usually the first meeting, it doesn't cost, the first meeting it's at the planner's expense. Once they kind of get a better understanding of what's going on with you, they can give you a guide in terms of what's involved in the strategy and what the cost will be. Depending upon the type of advisor will depend on the cost. So I can honestly tell you that the range of financial advice fees can vary from 1,000 to 10,000. But more so, I guess the values and implementation of the advice. Anyone can really give you the strategy. So it's very hard to answer that question with an exact number.
But ideally, it's a money-saving thing, that if it costs you 5 or 10 grand, then hopefully you're going to make at least 5 or 10 grand more. Otherwise, the advisor wouldn't be hired all the time. So hopefully, it does mean that you're actually making money at the same time. Yeah,
I guess it's I have a kind of really simple value proposition. It's about getting your entire financial house in order within the first year of us working together. So it's kind of even hard to monetize that, but setting up the structures and getting all your affairs in order, and you're clear about what you want to do. In a way, a lot of that time is saving time, and for most people that should far exceed the investment, because the quality of life should improve.
Sounds good. Now, one of the things I always say is our parents' generation was always trying to get rich by saving money. The new generation is trying to get rich by spending money. So sometimes investing in a financial planner can be one of the best things to do. Anyway, time now for a short break. We'll be back soon.
You know when you just can't find the right lid? Goodbye, mess. Hello, Decor Matchups. Purple lids match purple bases. Red lids, red bases. Also available in glass. Thanks, Decor.
If you're not in a financial position to live the lifestyle you deserve, ask yourself one simple question. Why? I'm Andrew Barnett, founding partner of LTG Gold Rock. And today, we want to give you free and direct access to watch us trade live. You'll get to see the investment strategy and tools we've developed that hundreds of Australians just like you are using to earn their way to financial independence without banks or fund managers.
At the moment, I'm really happy with the returns I'm getting with LTG Gold Rock.
If you want to change your lifestyle, get onto LTG Gold Rock.
Register for LTG Gold Rock's exclusive offer today, and you'll receive free and direct access to our live online trading room. My team and I will trade live in front of you, so you can see in real time on a real account just how much money you could make by following our trades. You have the potential to live the life of your dreams. Go to dailytrade.com.au to register now.
A morning walk on the beach. What better way to
miss out on these quality outdoor director chairs in solid eucalyptus and tough WeatherTex fabric, just $25. Yes, just $25. Hurry, when they're gone, they're gone. That's why Masters is Australia's fastest growing hardware store.
Celebrate the land of the big. Pineapple, banana, prawn, and a bigger than big discount of up to 30% on real car insurance. That's 30% on real car insurance. Search real car insurance now. Be quick as a rat up a drain pipe. Offer ends 14 Feb.
Shop online for free delivery on everything golf. TaylorMade gloves 6-pack $49. 3 dozen tricks and balls are just $79. And this Garmin GPS watch is reduced to clear at $139. Order now with free delivery only at golfbox.com.au.
It's a dolphin.
Sports Night is back with a bang in 2015, the Asian Cup here in Australia.
Get some momentum going and put some pressure on the other teams in your group.
Can the Socceroos go all the way in their third campaign? Cricket World Cup also on home turf. How will the Aussies go, and will Michael Clark feature? Oh, and throw the Australian Open tennis in as well.
Gives me goosebumps thinking about if they're going to walk out there.
So much right here in the sporting capital of Australia, Melbourne. Controversial? Always. That's Sports Night 2015 on Sky News.
Queensland 2015 may have gotten off to a slow start. With so little time left, the vote sweeteners are now flying thick and fast. Follow every move the key players make in unrivalled multi-channel coverage of Queensland 2015 Sky News.
Welcome back to Your Property Empire. Now, this evening we've got a very special show looking at financial planning and the wider world of wealth creation outside of property, and we're joined by Mike Sikar. So, welcome back to the show, Mike. I guess with the financial planning, is it something that you just turn up once in a blue moon and have a quick kind of power session with them, or is it something that more like a coach down at the gym that you need to be doing all the time?
Yeah, I guess it's very much an ongoing relationship, and you know, it's all about having, you know, tracking your progress and making sure you're on target to achieving your goals. I think that, look, the main thing is the financial plan in itself, you know, anyone can give you that. The real advice is an implementation of the plan. So I guess the main thing is that you need to find someone that you can trust, that's going to hold you accountable to do all the things that you need to do so you can live the life that you want to live. I guess, you know, without having an advisor beside your side, it's very easy to fall into the trap of doing all the things not doing all the things that you should be doing. So even though you know what you should be doing, it's a bit like, you know, not being disciplined with your cash flow, making poor decisions, not having an appropriate investment plan, and I guess just spending your life making poor decisions about your finances. So you know, the reason why people have me as a coach and have me in their life as an ongoing basis is that I save them from that. I guess I take away the pain, the stress, you know, the noise, the distraction from things that they have to do themselves so they can live the life they want to live.
And so what does a financial plan really look like? So you go and see an advisor, you sit down, I assume, for an hour or so and talk about goals and things like that. So where does it kind of go from there?
Yeah, I guess once an advisor does his due diligence and understands where you're coming from, it's really, you know, the financial plan, you know, it looks at your current financial position. It gives you, it addresses all your current, you know, short, medium, long-term goals. It makes recommendations around the goals. It looks at various strategies and implications of those strategies towards achieving your goals. And it makes recommendations around, you know, risk management, ownership structures like self-managed super funds, family trusts, and then, you know, looking at insurances. And it really gives you, you know, the cost involved in any products potentially, or in any ongoing advice service type of thing.
Okay, because I guess if you're just trying to do that yourself, there's probably a whole stack of stuff that you might never have heard of, just like probably self-managed super funds, probably going back 6-7 years. Most people hadn't even heard of them, whereas now they're all out there. I guess there's a whole bunch of different things that people could look at. So what are maybe some of the common mistakes that people are going through, either if they've never seen a financial planner, or maybe they've had some bad financial advice in time?
Yeah, I mean, it's, I actually did a survey on LinkedIn last year, and I interviewed 1,250 senior professionals, and I actually asked them what's the 5 biggest blockages of why they don't have financial independence, or, you know, why they don't have passive income, I call it. And in order of kind of importance, the main ones were they had no structured plan or long-term goals. It's pretty straightforward. We all know that, you know, if you follow like a SMART principle with goals and you write them down and you put some time frames to that, potentially you can go about having a crack at achieving them. You know, they didn't, you know, like you said before, they avoided risk by taking no action, and hence that procrastination is a big part of it. You know, poor cash flow management. You know, cash flow management is the cornerstone of good financial planning. You know, they're paying too much tax. You know, Australia is, as you know, in terms of as a country, we have one of the largest, you know, tax structures in the world, and I guess, you know, on that, you know, you need to have the right structures in place. You know, the trusts or the super funds, are completely understanding the benefits of negative gearing. And then and the last thing there is just not having enough good debt. You know, there's obviously that whole good debt, bad debt, and I'm sure you would have spoken on the show over time. You know, your family home is great, it's like a lifestyle decision, and then you've got, you know, investment property, that's more investment decision. But I guess the thing is, there's things that are good for you emotionally in life and things that are good for you financially, so it's a bit of a balancing act to getting what you want.
And it's very true what you say about the numbers side and the planning, because I've just been doing a whole bunch of conferences with the accounting associations, and again, of all people, they know how to write their budgets and forecasts and cash flows.
Sure.
But do you think an accountant wants to do that when they've been doing it 60 hours a week? So again, either people haven't got the knowledge, or if they've got the knowledge, but they haven't got the time or the inclination to go and do it. So sometimes it's just like lighting a fire under people. If we talk about it as like, what's your why? You need a big enough why to get out of bed, whether it's your material cars and holidays and things like that, or if you're worried about being poor and working for the rest of your life. But you've got to find a reason, though, haven't you?
That's very true. I mean, that's the cornerstone of what, what's called values-based financial planning. It's all about understanding your why. And it's, why do you do what you do? Why do you get up in the morning? And that's obviously going to be a big driver to helping you get ahead.
So certainly 1,250 people, that's a lot of people to ask of why they haven't got ahead. What about maybe some of the wealthy ones? What are the wealthy ones doing that maybe the less wealthy aren't?
Sure, I guess the main thing is they get good advice. It goes without saying, they have potentially a panel of advisors that give them advice on different things, or they have someone like me coordinating everyone. They manage their cash flow to create surplus income. It sounds pretty straightforward. Spend less than you earn. They've got a regular savings plan. Most people really underestimate the power of compound interest. One of my favourite quotes I have from Bill Gates is, most people overestimate what they can do in a year, but underestimate what they can do in 10 years. So a lot of the wealthy people, it's all about a slow and steady accumulation towards wealth.
Yeah, it's like the eighth wonder of the world, or however many numbers there are, but it's an absolutely massive thing. So again, whatever you did 20 years ago or 10 years ago is much better than going twice as hard. Like me at the gym, I go kind of once a year. Tom Panos goes every day, and fit as a fiddle.
Well, that's right. I think that the thing is, what I've found is that, wealthier people, they kind of appreciate that the property and the share market work in cycles. And, that usually that sweet spot, that 10-year time frame is what it takes for you to realise the value of your investments. Longer term time frame. And then I think as well, something I'm passionate about, depending upon your age, and I'm sure you've seen that too, but you should maybe consider renting and not owning your family home, depending upon your goals type of thing, because I guess it's depending upon where you are in life. If you make some decisions which are more lifestyle based in your early parts of your life, under 40, they can definitely have ramifications down the track.
Yeah, because certainly for renting, then quite often the expensive house is a third of the yield.
Sure.
And at least all your debt's then deductible, so it's actually very efficient. But the key is as long as you're investing in something else. So don't be a renter with no other assets.
The main thing is you either got to hold yourself or have someone holding you accountable to being diligent with your cash flow and making sure you've got a plan. And
Now, a really dull thing that I found coming out of school was at kind of 18, they were trying to flog me all these insurances and I had no interest whatsoever. Now I've got almost kind of 8 figures of debt, then insurance is a massive thing to me, and I go to my planner and I actually try and maximise it and spend as much as I can on insurances because I know it's a really important thing. What are the main types of insurances and why is it that important? Because most people don't have the same thought process as me.
Well, it's interesting, I guess people, my wealthier client base actually have the most insurance because they don't want to lose what they've worked so hard to get. But there's 4 basic insurances. Life insurance, where you've probably seen that advertised on TV very frequently these days. It's just really, if you pass away, that your spouse or your beneficiaries will receive that money tax-free. You've got total permanent disability insurance. It's mainly if you become incapacitated or you need a full-time carer or you need rehabilitation.
And that's kind of more expensive than dying, isn't it? That's when you need the money.
It's definitely more expensive to have you alive, and it's very hard to quantify how bad it's going to be ahead of time. But generally life and TPD are kind of linked together for cost savings. The other types of insurance, I guess, in my career, the one I've had the most claims with is the trauma insurance, or it's called critical illness. It covers you for 50 critical illnesses, but the main ones are like cancer, heart attack, stroke, bypass type of thing. It's just really designed to give you a lump sum of cash when you get a critical illness.
And virtually all of us know someone that's gone through that, don't they? So the chances of it happening is reasonably high.
It's very true. And the thing about it, unfortunately, that if something ever does happen, it's severe in terms of having a critical illness. It's almost impossible then to go get critical illness insurance after the fact. And then the last insurance, I guess, very important while people are still working. It's just called income protection. It covers you for 75% of your gross wage, and also covers you for 100% of your super contributions. A lot of people don't know that, just because if you're, let's say, 45 and something happens and you go on claim from 45 till your retirement, you need to make sure that those super contributions are still going in, that you've got a lump sum there to kick in after income protection stops.
And the great thing is you can lock it in. So if you've just got a pay rise and things like that, that's a great time to go and see your financial planner, lock it in, because once you've got the insurance at that high cost, that's pretty much guaranteed forevermore, isn't it?
I think maybe you're talking about the cost savings, the step versus level at all.
Right, okay.
I think so. It's one of the you know, magic wonders of the world in terms of insurance. It's just all insurance companies offer two types of policies. One's called step premium. It just means that for all those four insurances I talked about, the cost of the insurance goes up every year as you get older. The reality is the average Australian gets insurance in the mid-30s and cancels insurance in the mid-40s. That's a proven statistic. And why? Because the cost of the insurance has started blowing out. The other option, and depending...
That's the time you need it, though, because your risk is going to be a lot higher.
As you get older, statistically, of course, the risk of more lifestyle illnesses come into play. Generally speaking, if you're under like 45, 50, the other option is locking in kind of a level premium where the cost of the insurance is fixed for the rest of your life. It does cost you a little bit more today, but there's significant long-term cost savings.
Now, again, going to an advisor before you get this insurance, there's ways to structure it as well, which will make it cheaper for you as well.
I think that's kind of the value. I guess there's a lot of intricacies with insurances and bells and whistles, and you know, the thing is, there's a lot of TV ads at the moment talking about insurances, but a good advisor really can, if you structure them correctly, can save you a lot of money. So, for instance, life and TPD insurance should always generally be inside super because it's tax deductible to the trustee of the super fund. And for the business owners out there, even if you don't pay yourself super, if you just had, if you paid yourself super contributions, it's tax deductible to your business, and by having those insurances inside super, they in effect become tax deductible. So some, very, very much cost savings with structuring.
And you mentioned looking at the different policies, because for the average person to look at 10 different policies and try and find what's the difference between all those things, just like you're choosing travel insurance or something, it's got to be impossible. So this is where it's got to be advisable to go to someone else that's doing it all day, every day, because at least you've got a better chance of saying, no, those 5 policies look really good, but they're a waste of time. These are the ones that are actually covering you and paying you out. Yeah,
I guess that is probably, hit the nail in the head. One classic example is just with the critical illness is you can have one feature called a buyback. It just means if you claimed on, one critical illness, it means you can still claim on all the others. So just by knowing that exists, potentially means you can have that insurance for the rest of your life.
Well, Mike Sikar from Delta Financial, thank you very much for joining us this evening.
Thanks so much.
And thanks for joining us at home. I hope this has given you a wider idea on wealth creation and given you some ideas on maybe what you can plan for the new year. Anyway, until next week, I'm Chris Gray. Good night.